Let's update real quick.
Hey, Dave, can you hear me?
Yeah. Hey there. How you doing?
Good. How are you?
Good. I appreciate you taking the time. I was a little bit worried I was going to be late. I teach business. I teach business at the university, and the class. I said I got a hard stop at 12. So, but I'm over here in Hawaii, and I'm doing all this virtually with my class because I teach at Shepherd University over in West Virginia, right on the border of Maryland and Virginia. And so I've got an interesting life here.
I'm
nice.
Yeah. So you're doing everything remotely as well?
Yeah. Mm-hmm. So anywhere I can have 5G and Wi-Fi, I can work anywhere. So that's why Kodi, formerly K2, is so interesting to me. As you know, I've been a follower for I don't know, maybe a year and a half or so.
Yeah,
and I was, so it's, I've been intent on actually jumping in like March or April. But the reason I'm in Hawaii is my mom called me. She had stage 4 cancer. And so I came up to Hawaii to help care for her as her healthcare power of attorney.
Sadly, sorry to hear that.
Yeah. Well, sadly, she passed away last Friday morning, and no, she went with peace and dignity and beauty, and probably one of the most, although it was sad, probably the most awesome experiences I've ever had with my mom. We got to catch up on a lot of stuff, and she went out how she wanted to. So, But,
no, definitely. Yeah, no, sorry for your loss, but I'm glad that you hear that your mom got to go out and she got to live, to the fullest at the very end.
Absolutely. Well, it's taught me a lot about life too. And now that I'm here in Hawaii, I'm not going back because it's 32 degrees in Virginia right now with snow or frost or whatever. And I think I'm liking it here. And even though I have to get up at 3:30, 3 in the morning to catch the New York Open, I'm good.
Yeah. When I was on vacation out there, I was like, man, I thought it was going to be pretty bad, but it's actually not too bad, especially like being in Hawaii because the weather's so nice. You wake up and it's great. It feels nice.
Yeah, exactly. So my plan is to, generate revenue with Kodi, and I'm probably I've got a couple of business things that I'm launching as well, but I figure, I like to wake up early and we'll finally get the stake in the ground. I went ahead and signed up for the program under E8 funding or whatever that is.
Okay.
Just thought I'd try it. They came out with something that was like 250K account for whatever. And it actually is in 3 phases, but you will get to manage. I think they'll scale you up to $1 million if you can get there.
I heard of E8 a while back when they were still new. I know they had a lot of issues like in the beginning, but I don't know about how it is. I'm pretty sure they've gotten better. They have to compete with all these other companies. I'm pretty sure they've leveled up and they've figured everything out to make it actually work.
Yeah, I think they have, but more to come on that. I'll share with the group, and but I'll probably go ahead and crank up an FTMO next week as well, just because they've been around so long and they're the best, so they set the standards. But yeah, anyway, so the reason I wanted to do a one-on-one with you is that when I thought I was able to have a normal schedule a couple of weeks ago, you were coming up with the high-low quick scalp.
Yes.
And things moved pretty quickly. So then when I jumped on a couple weeks, maybe a week or so later, now we're doing the reversal and the momentum. So
yeah.
I just wanted to make sure that I was on board, not missing anything. And I guess now the two focuses are those two things. And I just wanted to, just get it straight from you. I did watch the mentoring session and participated, I guess, this morning and in yesterday's live. But I thought I'd just put the stake in the ground and get it from the master himself.
Yeah, no, definitely. Yeah. We've gone through a couple of changes. The thing with the high-low quick scalp is that it's a very lucrative and good strategy to use. However, the downside to it is that the problem with the high lows is that they repaint. So like if the price continues to drop lower or it continues to go up, you can be stuck in a tight position unless you have good entry. It's still a good strategy, but it's sorry, let me add it. Sorry, my dogs, every time they hear a little thing, they start barking, they go all crazy.
Oh yeah.
Yeah.
Okay.
So back to what I was saying with the high-low quick scalp, I'll show you an example of how it works. It's not very difficult. It's actually one of Maddie's favorite strategies. He's the one that mainly applies it because he's on point when he's following the charts. Like when I'm on the live sessions, it's a bit hard for me to follow because the high lows come up so quickly. So I have to really be staring at the chart. For him, he's like literally staring at the chart and watching them come. From his testing, he's actually tested it forward, like real live sessions, and he's found it to be very good. Like he's been hitting a lot of profits and he's been very profitable. It's just you have to really be zoned in and you can't really take your eyes off the chart. So what I'll do here is I'll show you an example of the high-low quick scalp, and then from there we'll move on to the high-low momentum and the high-low reversal. The high-low reversal, as I mentioned earlier, it's kind of similar to the high-low quick scalp where it's a little risky because it's based off the high lows. I think the high lows they're very useful if they're used properly, but when the market is moving too heavily in one direction or the other, it's going to keep pushing the lows back and forth, or it's going to keep pushing them farther than they really are.
Right.
So we'll take a look at this first and I'll show you one example here. It's pretty simple strategy. Let me go over here real quick and I will just go to this candle here. So here are the requirements for the high-low quick scalp. We're going to look for sells here because price is obviously trending down. We have a sell momentum. So it's pretty obvious, when you have a trend down and you have a sell momentum, you're going to look for sells. So looking at a sell right here, you're going to identify bearish direction of momentum. We have the sell signal right over here. So that's going to be the first requirement. For the second requirement, you want to identify a high. So we don't have a high here yet. And we're going to move on to the next candle over here. And you can see here now at this point, we do have a high, right? So that's going to be requirement number 2. We have requirement number 1, sell signal right here. Requirement number 2, identify the high. Third, you want to identify a top wick rejection off the following candle. So it's kind of hard to back test it because, the candles are moving so quickly during the live session in real time. But we can just go here and we'll just use this as an example. So say, for example, price was pushing up, right? Like barely pushed up a little bit right here. And as soon as you see that wick there, that's where you're supposed to enter the sell. So this is why you have to be really zoned in because this will happen in a split second. It'll push up and then a second later you see the wick and you have to hit sell right away. If you're not paying attention, you're going to miss the entire move. So first requirement, identify bearish momentum. Second requirement, identify the high, which is right here. Third requirement, identify the top wick, which is off this candle right here. And then you'd enter the entry there. For the fourth requirement, you just want to make sure that this entry doesn't happen past the momentum here. And the reason for that is because if price passes this area, you'll typically get a buy signal. And then now you're looking for the opposite type of entry in the other direction.
Right. Okay.
Yeah. So, I mean, it's pretty simple. You have the setup right there. This would be for 100 pips. You kind of want to have a tight TP stop loss because you want to get in like really quickly. It's like going to hit TP within like, moments. So like, for example, you would enter right there. If you would have entered a little later, which, sometimes is the case because of the spread, you'll probably enter at some point down here. After a few moments, it still pushes down. And then it ends your TP at that point.
Right. Okay. Yeah. I think I like that. I've actually tried it on MT4, with MT4. What do you call it? A demo account.
Yeah.
And I was trying to figure out ways to filter out, those repainting candles or lows or highs or whatever, using other indicators, and there's just no way.
Yeah, I think the main way to really do it is if you're only taking it when the price is trending like this, when the pivots are spread out and they're angling down. Because when it's a situation like that, typically price will just keep pushing down. When it's like kind of messy like this right here, where the pivots are kind of bunched up, this is typically where you're not going to get any smooth moves. But if you get something like this where price is pushing up heavily, there's probably another entry that happened right over here. It's probably enough to hit your TP pretty quickly.
Right.
You just have to find the when the market is moving, when it's trending pretty heavily, because when it's like that, it's typically going to move at least 100 pips in your direction. As long as you're like, you're fishing for those proper entries, it should be no problem. The only problem is that the market, you never know what the market's going to give you. It'll be trending or it'll be going sideways, and you really have to make the decision, off the top of your head when you see it, or you're going to miss the entry.
Yeah, it almost seems like too, when I look at that, another confluence could, because I know that one of the strategies, I guess the original strategy was the pivot scalp, where it, the wick would, just, break through one of the pivot averages or whatever.
Yeah.
And that can almost be like a clue that, okay, in terms of the trend or where it's gonna head next. So yeah, cool. Okay.
Exactly.
Yeah. I remember when was it Keith or Kevin?
Kevin had like some crazy profits. So if that's the guy you're talking about, it's definitely Kevin.
Yeah. I remembered when this came out. Well, I don't know if it was this thing exactly, but what he was doing, I recalled him saying something like he was using a 30-second chart side by side to help him figure out, where to get in. And, but it's still, that doesn't, it doesn't make anything, things any clearer, but he was killing it. I don't know if he's still using that technique, but
he actually is. He messaged me today. He was actually down very heavily today, but then he made it right back. Luckily, he messaged me today. He had like a choppy day. He was down 90,000 for the day, and then he came right back and made profit off it. So he wasn't on the live session today like he normally is, and then he was taking a lot of riskier trades. He didn't, he wasn't really understanding how the market was moving. For us today, we were kind of patient. We were waiting for those moves to come. So like, luckily for us, we didn't get caught in any bad moves. It seems like a lot of people who are just not analyzing the market fully, they got caught in a lot of revenge trading, FOMO trading.
Got it. Okay. Okay. Well, so between Kevin and Seth, they're bringing in 10, 20, tens of thousands of profits. Do they just have large accounts, or are they really running up 1,000 here, 1,000 there, and that's what their profit is?
They do have, from my understanding, they have large accounts, like a large personal accounts. I thought about doing the same thing as well, but the whole tax situation is just a mess if you start to trade off, offshore accounts. So for me, I personally, I like FTMO the way that it works, because I can run it through, a business and LLC and stuff like that. So that's why I personally like it that way. It's just less of a mess and less of a red flag if, you end up getting hit by the IRS, and
Yeah.
So maybe eventually I'll do something like that. But I think as of now, I think the low risk trading with these funding companies are beneficial to me and everyone else.
Right. Okay, cool. Yeah, I was worried what my bank would think if suddenly they're, getting big deposits from Europe, like Eastern Europe or something like that. It's like, okay, well, we'll see. That'll be a good problem to have once I get under it. But cool. Yeah, I think I'm good with this quick scale.
Okay.
And but like I said, it was a surprise to me to see that you had moved or focused, and I actually like the idea of focusing on one or two strategies, because I was overwhelmed when I first got into it, and just I had analysis by paralysis because I was trying to figure out which one of them I actually wanted to use, and so here we are, a year plus later. So on the two, what I'd like to do is just have me walk through that again. I was hoping to have gone through the mentoring video and watch it myself and have better questions, but I think I understand it. I would just like to see it, my speed instead of the mentoring session speed, just like step by step, slowly for me. That'd be awesome.
Yeah, no, definitely. Yeah. And I'm sure like when you look at the requirements and you see us go over it, it's like a lot of these strategies are based off the same thing. It's either based off the momentum signal or it's based off the high low. There's just small variations to it. So a lot of them, and I can see why you'd get analysis paralysis, looking at these trades, because you look at a V1 or a V1 continuation, and you're like, okay, which one do I apply when they all apply on the same candle? That's kind of what I tried to move away from, just focusing on one. I think this is a good mix of, I feel like this strategy here is a good mix between the intraday, where you match the momentum with the trend meter, also the pivots, and using the high low as a confluence, basically, not necessarily the main requirement, but one of the additions that you would add to something that we're already applying.
Okay.
So I guess we can use the same candle again, and if you want to see another example, we can go over that as well. But looking at this right here, so this is going to be the high-low momentum pivot scalp. This is mainly applied on the 1 minute. You can apply the same strategy on other time frames. However, you would just need to use a different type of TP stop loss, because this is obviously for the quicker moves. So looking at this one right here, the first requirement, we want to identify a momentum signal. It doesn't matter whether it's valid or invalid. It just needs to be a vertical signal indicating that momentum is going to move in that direction. So right here, we have a sell signal. That's going to be requirement number 1.
Okay.
Or requirement number 2, you want to draw a zone at the high low that happens before the momentum. So since you have a sell signal here, you're looking for a sell, and you have the high right over here. So with that said, you're going to go and draw a zone over it. I use the rectangle tool. I also use the magnet tool here, and I just highlight the entire high candle right there.
All right.
Typically, I'm not sure if you use the extend to the right feature. Usually it's just like that, like a regular rectangle. If you extend right, it'll go to the right. So once you have that, that's going to be requirement number 2. Requirement number 3, you want to confirm that momentum is rejecting off the high-low zone. So by that, you just want to see that price is pushing away from the zone, which it is right here. So with that said, we have requirements 1, 2, and 3 met. For requirement 4, you just want to confirm you're trading in the direction of the trend. You can use the trend meter and the pivots. So looking at the trend meter down here, you can see it's red. So this is going to indicate that price is trending down. These pivots here are an extra confluence. You can see that the red pivot is on top of all the other pivots, level 4, and they're all angling to the downside. So this is going to confirm that it's in a very strong downtrend.
Okay.
Once you have everything met there, you let the trade run. And then you use the default settings for TP stop loss. You're only going for 100 pips, quick scalp. You let the trade run, and eventually it does hit TP right there. This is kind of a not the best example, because this is later in the session. Like typically I won't take any trades after 12. So like basically all of this right here is a dead zone for me. But I'm just using it for example purposes.
Sure.
Yeah. Do you want to see another example, or is there?
Yeah, go ahead. Yeah, go ahead and do one more.
Sure. Yeah, no, it's fine.
Yeah. And this is for the other watchers.
Yeah, no, definitely. So let me show you a buy now. So we have a buy right over here. All right. So looking at this right here, I just want to see how far this is. I think this should be fine. Or yeah, I think this should be fine for the most part. So basically same thing again right here. You want to identify the momentum signal. We have a buy signal right here. This might be a little bit of an iffy trade. I think it's fine. The only reason I'm saying it's a little iffy is because it looks like market is actually ranging right here, but I think the range is wide enough where you can, at least take some trades and still get in and out with enough movement. Let me just measure this real quick and see how far the range is. Typically, if the range is too tight, like if it's like a 20, say about 200 pips, like 20 points, that's when you typically want to avoid it, because that's when it's going to go sideways for a while, and then you might get stuck in the position.
Right. I think in the last mentoring session or live sessions, you said 500 was it 4 or 500?
Yeah. So 4 or 500 is pretty okay. Anything below that, you kind of want to be a little bit careful, because if your stop loss is 300 pips and then it's ranging back and forth like 100 pips, you might get stuck in that position. Then you get a spike away from your position, and it might go. You either get lucky or you don't. So that's something that you want to watch out for. But this looks fine here. Yep. So first requirement, identify momentum signal. So we have the buy signal right here. It's gonna be requirement number 1. Requirement number 2, you want to draw a zone at the high low before momentum. We have a buy signal here, so you want to look at the low, and it is right down here. Okay. With that said, you have the first 2 requirements. The third requirement, you want to confirm that momentum is rejecting off the high low zone. So right here, we have this candle pushing away from the zone. It's within the zone, it's pushing away. That's going to be requirement number 3. And for requirement number 4, you want to confirm that you're trading in the direction of the trend. The trend meter down here is green, so this confirms that it's in a bullish trend. The pivots here are a little messy. They're not as clean as you'd want them to be, but the red pivot is down here, level 4, and everything.
Yeah, it looks like it's just right there, yeah.
Exactly. So it looks like it's shifting up. So with that said, you have all of the requirements met. You enter a long position right here. Okay. Your profit target is 100 pips. Stop loss is 300 pips. Let this trade run. And it looks like it came down a little bit. So for this, let me see. This here does hit stop loss. I'm trying to figure out like what was going on here. This is kind of late in the session. I typically, obviously I don't trade after 8, but it looks like volatility here kind of just spiked down. I'm not sure if there was anything going on around this time. I know that there was news today. I'm not sure if you heard about the missiles that hit Poland today. So, Poland's part of NATO. I'm not sure if this would have affected the market at all. I don't know if there's anything else that happened at 11. There was a G20 meeting. But yeah, other than that, I don't know what else happened today, aside from whatever was going on in the world, the Russian missiles, and then Trump possibly running for presidency this year. So today, there's a lot of things going on behind the scenes that I don't know is going on. So I didn't trade there, so I can't really tell if there was something that caused price to spike like that.
But other than that wick, that would have been a good.
Yeah, because it looks like price wick down like just one small wick, and then it came right back up. So it could have just been an unlucky trade. I mean, stuff like that happens. Typically, this is why I don't trade after 8, because you start to get these weird movements. This also came up around like 11. So this is lunchtime here in not the US, but on the West Coast. So you'll have people that are coming back into the market. This is where you get these spikes of volatility. And there's just a lot of red flags. So like one of the red flags I noticed here was price looked like it was ranging. And then also if you look back to these candles here, there's a lot of big wicks. So there's a lot of factors that could have played why you wouldn't have taken a trade here. Depending if you took it or not, it's a hit or miss. But even if you were to lose this trade, you'd probably make it back after the next couple of trades.
So, it seems like it. So basically avoid anything running up to 11 o'clock New York session. Because that's 8 o'clock your time, 11 o'clock New York time.
Because if you were to chop up, so like this is what I'll do here, and if this is why I stopped trading after 8, because typically what I do here is I would chop up the times, so you can see from like 6:30 6:30 to 8 is our live session. You can see it's kind of a smooth move. It's not really anything too crazy. It's just like back and forth, smooth move. Right here from 8 until 10, this is typically where you get a lot of consolidation, a lot of sideways movement, drop a little bit, sideways movement. And then this is where you start to get the crazier movements because you get this mid-market reversal where price kind of goes up a little bit and then it reverses down from 10 to 11. And then from 11 to 12, you get the reversal back up.
Yeah.
So this is typically why I don't trade around these times. If you were to trade during these times, I would probably trade on a higher time frame, like a 10 or something, because you can see it a lot smoother. But look at this here, you can see how, you know, you could get caught in, because price will be moving here. About, let's see, from like 10 till 10:30 or so, you'll have like a smaller movement, and then you start to get these really big movements right here. Like it goes from moving, you know, under 1,000 pips to like almost 3,000 pips. And then reverses right back up. And then you just get in a mess right there. So that's why I don't even like trading after 8. Like, that's just my cutoff.
All right, good to know. Okay.
Do you want to see another example, or are you good with that?
I think I'm good. I see the mechanics of it. So
Oh, so here's, I forgot I didn't have the sessions on. So it looks like around this area right here was at the sessions, that same trade we looked at.
I see it.
So this was the one right here that we took that kind of spiked.
Yes, very close. Yeah,
it was actually touching it. So we actually wouldn't have taken that trade there. Okay. So do you want me to go over anything else, or you want me to go over the high-low reversal, I believe?
The reversal was that's the other new focus, right? Because it's the momentum and then the reversal. And then I noticed you still did, I think you know, you're doing like the 10-minute daily, and of course the breakout is still popular at the open, right?
Yeah. For the breakout, I typically like to take it if like there's a very strong bias. Like if everything is bullish and then we have retail sentiment in that direction, then I'll possibly take it for the most part. Or I'll take a partial move, like, you know, if it lines up with the momentum signal, that'll also line up. Like I think today's it lined up. It was the same. It was a high-low momentum pivot scalp, and it was also the breakout. So this is the one that I took. I took it for a quick little move within the, you know, movement there. And then this was like the actual breakout. So it pretty much lined up on the same candle.
Okay. Good confluence.
Yeah, exactly. If you have like strategies that line up on the same entry, odds are it's probably going to hit.
Okay. When you talk about sentiment and you know, looking at the different, you know, charts out 1 hour, 4 hour, whatever, you're really looking at that for the breakout, right? I mean, I guess in terms of direction or just overall direction where you think the market's going to go for the day, looking at the sentiment is still a good idea for the momentum and the reversal strategies as well, or because there's such short term, it doesn't really matter.
Yeah, for short term, it doesn't really matter too much. For the breakout, since it's such a bigger move, it's, you know, it's 500 pips. It's like 5 times what we're normally looking for. That's why I use it for that, because, you know, we have the short term entry, and then I want to make sure that it continues pushing in that direction to actually reach the profit target. So that's why I use sentiment and all that stuff for the bigger moves, like the daily, the breakout, even, you know, the 5 or 3 minutes, sometimes if people want to take that. But for the most part, the 1 minute, it doesn't have a huge impact, because like if you're looking at the market from today, like we had a bullish bias, but price was still dropping short term. So like short term over here, there's actually a couple entries that, you know, could have been taken, like this one right here possibly, and then another one right here, and then there was actually a lot of entries here that came up for a sell. And the thing is, you don't want to cut yourself short, right? You don't want to be stuck on the higher, like the longer direction when it doesn't really matter, because you can still catch these little trades here. Eventually, of course, price will correct back up, but you don't want to cut yourself short and then miss out on all these other sells just because you're biased for the longer term move. Because there's a lot of that would have came up 1, 2, 3, 4, 5, 6. And I think this is when the market started moving kind of weird around the mid-market reversal. So price kind of finished dropping at this point, 1030 hit, and then price started going the opposite way.
Yeah. Okay. Got it. All right. Yeah. Because I was thinking maybe using it as a filter, just, yeah, like I said, just taking the trades in the direction of the sentiment or the opposite of the whatever the sentiment is, and going by there. But I don't want to miss anything either. So.
Yeah, exactly. Yes. Okay. So it'll, like, if you have an entry for a buy and, the sentiment and everything is very strong for a buy, then yeah, of course you're going to feel more comfortable taking a trade in that direction. But I wouldn't necessarily base it directly off that unless you're taking a bigger move, like something on the 10-minute, because that those types of trades take a lot longer.
Yeah. I don't know if I've got the stomach for a 10-minute.
Yeah, no, same here. I like to
just watch it play out.
Yeah, exactly. I like to just get in and out and then let it be. For Forex, I don't care as much because I can set my risk. So I'm not really risking too much. But since we're on US 30, it's such a fast asset. The problem with US 32 is that it doesn't typically stay in one direction for a long time. So if you're in that position, I don't have the stomach to let my position get to like 90% in profit, and then all of a sudden it just goes complete opposite.
Right.
Yeah. And there's a lot of different factors for US 30, especially with stuff going on in the world.
Yeah. And I think I'm just going to stick with one asset, know it well. So I don't want to be distracted by Forex and having to figure out the pip math and things like that for that. So okay. So I think we just have the reversal to do, right?
Yeah, the reversal. Yeah. So for the reversal, you can pretty much apply it on like whatever time frame you like. I'll show you in the 1 minute because it's something that you like to apply yourself.
Right.
You can probably use this as a confluence, maybe not as a standalone strategy, because as I mentioned, a lot of these strategies based off the high lows, they become a bit risky because they repaint. The difference with the high low momentum is that it's tied with the momentum. So once you do get a momentum signal, it typically doesn't reverse on you. So even though it's called the high-low momentum, it's really based off momentum and pivots. We're just using the high-low as the confluence. For the high-low reversal, this is based off the actual high-low. So this is where it becomes a bit tricky. But if you use it as a confluence, it actually works very well. So let me see if I can find an example right here. There's actually an example right over here. Actually, no, not this one. Actually, there is one right here. So let's go back to this one right here. So for the high-low reversal, depending on if you're looking at the high lows that are red or the high lows that are green, you can see here that these two high lows are both red, right? So with that said, we're going to look for a sell here. You're going to look for a low with a red candle. So we have the low right over here. It's a red candle. And then right here, we have the high, which is also a red candle. So you have these two here. This is a reversal pattern. Basically, you're seeing a low, price has reached a low, and it's a red candle. So it shows that the price is bearish. This is a small retracement here. With the retracement, you can see that the high here is also a red candle. So this shows that the control is bearish right here because both of the high and the low is both red. So the way that the logic behind the strategy is basically you're seeing that price drops lower, it retraces, and bears are back in control. So now it's coming back down. That's kind of what you're anticipating. So when you have that set up right there, it's very simple. Low with the red candle, high with the red candle. You enter on the close of the candle. Stop loss is going to be placed at the high low that you pretty much identified the entry from. This is too tight of a move, so this wouldn't be a real entry. It's like 80 pips, so you basically barely be able to cover spread. But just use this as an example. You can see right there that it goes straight to profit target. So let me see if I could go back a little further where the volatility is actually a bit higher. So you can see like the actual power of using this as an actual entry. So let me just go over here real quick. So here's the same thing again right here. You have a low right here with a red candle. You have a high over here with a red candle. Same situation. This is a reversal pattern. You can see price kind of drops, retraces, and then you're expecting it to come back down. So with that said, you're going to enter right here. You're going to set your stop loss at the high of this candle right here. And this is just to tighten up your position. So just in case price does reverse on you and establishes a newer high, you get stopped out for minimal loss. And since it's a one-to-one, since the strategy comes up pretty often, you'll be able to recover and bounce back on the next trade. If worse comes to worse and you lose a trade. So for example, right here, here's the entry. We have low with the red candle, high with the red candle. We're anticipating price to come back down. We enter the trade right here, let the trade run. And there you go. Price drops a little bit and then it drops straight to a full TP.
Right.
So I can probably take off the pivots here because it's not one of the requirements. I'm not sure if that's a requirement that I should possibly use. I haven't really thought about it yet because I haven't really worked on this one too much. I just came up with the idea and people started to run with it. But eventually I think the trend will probably have a say in the market because the three main things that I always tie in with every strategy is the trend, because you want to have some sort of bias in the market, and then 2, momentum, because you want to be trading where price is actually going. So those are the 2 main things. And the third main thing is just looking for a reversal pattern. So if you're looking for buys, you want to wait for price to retrace and then continue in your direction, vice versa. If price is going the opposite way, you want price to retrace and then continue below. So
Okay, so in this case, the labels have to be the same color and the candles have to be the same color, whatever direction you're trading in.
So the labels don't matter. It just depends on like where your high and low is, but the candles are what matter. So like, for example, here you have low with the red, high with the red. So that's cool. And then vice versa, if you're looking for a buy, like this is an example over here for a buy. For this right here, you can see that you have a high with the green candle and a low with the green candle. So you're basically looking for the retracement. So you have the high established here. You have price retracing down. Once it establishes a low right here, you can see that it's a green candle. This is going to indicate that, okay, this is a reversal. Price is retraced. Now it's ready to go right back up.
Yeah. Okay.
So pretty simple. I mean, there's probably something that needs to be added to this because I haven't really looked at it. It's just something that came to mind. But as I mentioned before, this can be used as a confluence. So like, for example, you have this setup here. You don't necessarily have to enter right away, but say, for example, you get for example, here you get a buy signal, right? So now you have the confluence here because you have a high-low reversal because you already know the reversal is coming.
Right.
And then you also have a high-low momentum entry here or a high-low momentum pivot scale.
Right.
So you have that set up there. The odds of this hitting is probably likely. I mean, you probably won't have a tight stop loss here, or maybe you could, but price ends up, this is the one that we looked at. It was right at the sessions.
Yeah.
So you would have skipped it because it was at the sessions. But for example, there was no sessions there. And you were to take this as a regular high-low momentum, not a pivot scalp, but a normal high-low momentum, which is where you enter here. Your stop loss is actually going to be a lot wider. So it's now 460 pips, not 300 pips. So this is for a 1-to-1. You're basically using a double confluence here. You have a high-low reversal, you have a high-low momentum, you let the trade run, and this one actually does hit.
Right.
So that's the difference between the high-low momentum pivot scalp and the normal high-low, which can be used on, basically any time frame.
Right. Yeah, though you wouldn't have taken the reversal trade, the fact that it did set up as a confluence for the next trade, the momentum trade, that would have given me more confidence.
Exactly. So say, for example, you missed the high-low, the reversal, right? So say you saw this and then you're like, oh, it already passed, so you missed the trade. But then you see this high-low momentum come up. You're like, okay, here's my opportunity now to make the entry. You have the reversal here. So price is going to push at least to, this high right here.
Yeah.
Typically, if it has an area to reach, it's going to, break through there and continue pushing.
Yeah. Okay. Yeah. And I guess I was saying here, we wouldn't have taken that trade because it was at sessions. But the fact that, that the momentum trade was setting up, it's like, well, if we had taken, the fact that we didn't take the trade because it was at sessions, it was still a setup. We just didn't take it because it was a session. It's still a confluence, right?
Exactly. You know, and some
Yeah.
people just
Yeah.
like to take every trade and they try to
Right.
ignore the session.
Right.
So
Yeah. Okay.
if you were in that situation, you'd have been like, okay, you know, whatever, I'll take the risk here. Because there's so many confluences here that align that, you know, kind of
Yeah.
give you confidence. Okay, price is probably gonna break through it. Because the sessions here aren't necessarily, you know, the end all be all. It's just we want to avoid losses, especially on the 1 minute. So that's why we avoid them.
Right. Okay. Sounds good. Okay. I think I got it. Just,
Cool,
you know,
cool. Yeah. Is there anything else that you want to cover or?
No, I mean, I've seen the breakout. Well, with the breakout, the one thing that scares me is that, you know, you say there's 5 minutes, you know, after 5 minutes, you know, the breakout opportunity trades are no longer valid. But, you know, sometimes it'll open and it'll just like open sharply down. And then, you know, I'm seeing these big candles and it's like, okay, if the sentiment is, um, if the sentiment's short, we're looking for a long, right?
Yes.
So that 9:30, the candles, they just break down and they're red, and we're still waiting for that green candle. And if we I'm trying to find the words, but you know, it's almost like, why would I try to go long after I've seen these red candles? But the breakout hasn't happened, or it may never happen. But if we're looking for a long and we get a big enough, strong enough candle that reverses, then we can take the next candle on its close, the previous one, for the breakout, and hopefully we'll hit our TP. Is that right? Because I mean, I've seen it. I've seen you do that all the time, and it's like, I don't know if I have the balls to do that.
Yeah,
you know,
yeah. Typically, I don't think it happened today. I think it happened yesterday, actually. But I know exactly what you're talking about. Like,
right. I mean, it's basically like a fake out. I guess that's what the official word for it.
yeah, exactly. Like it didn't happen today. Today actually was like a lot smoother than I was expecting. Yeah, so this was the breakout today. There was just a lot of issues here. Like I didn't have my sessions on this morning, so
Yeah.
typically I would avoid this trade here. But since I didn't see it, I took it anyways. But yeah, I know what you mean. Sometimes on the open, you'll have these big spikes down, but you know, the overall bias is so strong for a buy where you can already kind of predict that this is like a fake out. You know, the people that don't look at the sentiment, they're just chasing this move here. But realistically, you know, this is where people get trapped. And then we already know this is going to happen. So we just wait for it. And then it ends up going the other way.
Yeah. Okay. All right.
Yeah. And that's the only time when I take the breakout. The only time is like when there's like an obvious direction. Because if it's like half bearish, half bullish, you're kind of tossing the coin at that point. You know, you have a 50-50 chance whether it's going to go in your direction or not.
Right. Yeah. And you're looking at, I think anything above 70, but I've seen several times where, you know, you're taking it even if it's above 60 or greater than 60, right?
Yeah. The threshold is actually 60. So 70 is actually pretty
60?
high. Yeah.
Okay.
The threshold is like 60 to 65%. 60 is kind of weak because, you know, it can go from 60 to 59. You're kind of like down the middle at that point. If you're above like 65, then you know, you have majority of people on one side. So like at that point, you're like, okay, 70% is pretty high. That's like where you're like pretty confident that price, if, you know, price does the opposite, it's probably going to, you know, go in your direction.
Right. Okay. And then you're looking for at least 100 points, if I recall correctly.
Yeah, 100 points for the fundamentals. The fundamentals change very often though. So like that needs to be, unless it's like 200 or 300 points on one side, then you don't really have to check on it. But if it's at 100 points, you know, that's typically where it's going to be on the fence, basically. Right.
Okay. All right. So, all right, that gives me a little more confidence to try it out in the demos. But okay, I think I've covered what I wanted. I just needed to just have you put the stake in the ground with me, and I'm actually changing out my platform right now. I got rid of my Windows laptop, and I'm actually just going to start using my iPhone, and I'm gonna have a dual iPad setup, and one of the iPads will set with a big 50-inch screen, and that will be my trading platform. And I guess I'll use the the MT5 website URL to do trades, since iPhone doesn't do MT4 anymore. So I'll just do them online.
Yeah, you can do that. I think there's a way to install it. I don't know exactly how to do it. You just have to do it, I think, through like iTunes or something. Like you can download the actual file on the MetaTrader website and install it on your phone. Because I know that the App Store still doesn't have it. And I'm pretty sure there's videos on YouTube. But if you want to use the online web platform, I think it's fine. Because before, that's what I used to use as well, before they had the actual installation platform. It's still workable, and it's a big deal. I think you could even sign in on, or I guess you're not using FTMO right now, but FTMO has their own web platform as well.
Okay. Yeah. I mean, I wish everything could be done in TradingView. That would make it easy, but.
Oh yeah, there's a funding company that I found. It's called Surge Trader. I don't know if you've heard of it.
Yeah.
That they allow for it actually. The only problem is that they don't have copiers that work on TradingView. So like until I find something that's compatible, I'm probably going to stick with the setup that I have at the moment. But it would be nice to trade directly on TradingView. Hitting buy and sell on here be so much easier.
Yeah. Okay. Well, that's the way I'm going to go now. I'm not going to have any more broadband, in the house. I'm just going to use 5G. I'll have, like I said, 2 iPads and my iPhone, and I can just pack up and go wherever I want, not worry about Windows crashing, things like that. I think I think iPad and iOS and the iPhones are pretty stable. For me to,
definitely, I agree. Yeah, and a lot of people do the same thing, so I think you should have no problem.
Yeah. Okay. Good. All right. Well, I think you've given me the confidence I need. Well, I know
you're still on the road, so
yeah. Well, you've given me what I need to be confident. How about that?
Yeah, no, definitely. Yeah. It's an ongoing process, but you'll get there eventually.
Yeah, and like I said, I'd like to get monetized or revenued, sometime in December, which I think is going to be a bad month to start, but got to start somewhere.
Yeah. So. And, if you can do it in December, you can do it any month, really, because it's really going to test your patience and your discipline, because during the holidays, you're going to see a lot of slow days. The good thing about a lot of funding companies is that they'll typically give you an extra extension. So I think
these guys are, I can't remember the flexibility, but it actually has 3 phases. And it's just because what they want to do is they want to see consistency. And I think I can get the consistency through Kodi strategies. And, with that, you get a bigger account. Like I said, I think they'll scale you up, to, from 250K to, I think up to $1 million or something like that, if I recall reading it correctly. So so I'll report back on that, but I will get an FTMO account, just because that seems to be the Swiss Army knife of all the trading companies.
Yeah, exactly. It's definitely the gold standard as of now.
Yeah. So let me see. I'm trying to think if I have any other questions. No, strategy wise, I think I'm good. Cool. I'll just focus on the 2 that we covered. And I may do the 10-minute. What the heck? They seem to be pretty reliable. I think what I'll do is I will get some homework done between now and next week, and just study the trades that some of the folks have done, and posted online profits, and just go and do the replays through TradingView, and just make sure that I can see the strategies as they happen real time. I think I just need more screen time.
That's really what it is. It's all trial and error. You're going to run into issues, and you're going to have to find ways to figure out where the issue went wrong. Like for the trade we took earlier, I didn't realize the sessions was there. Now that we saw the sessions was there, I was like, okay, we obviously wouldn't have taken the trade. So it all makes sense. There's always a solution to like the issue whenever you run into something like that.
Yeah. Okay. All right. Well, I'm hoping that my life has finally just kind of stabilized, and I can, focus on building my dream over here in Honolulu. And
Yeah, what a great place to build it, right?
yeah, if you ever come back over here, let me know.
Yeah, no, definitely. Yeah, I'll definitely let you know, and I'm more than happy to meet up with you. I definitely want to make it
Awesome.
out there at some point.
Yeah, and you saw my thanks. Maraming salamat. That applies. I'm actually half Filipino.
Oh,
So
nice. Yeah.
yeah,
Yeah,
yeah. So
yeah, that was the first. I haven't had that in a while. So
yeah,
you're,
yeah. I used to speak fluently, but since I didn't have anybody to talk to until I got here to Hawaii, I'm actually brushing up on my verbal. But I understand it fluently. I can actually understand it without having to translate in the English and say, "Oh, that's what he said." So yeah, I when I hear it, I think it, and so it's pretty instant. I just wish I can talk instantly as well, but
yeah,
that's gonna come. Yeah, so I've
yeah.
got way more Filipino friends here than I did back in the mainland.
Oh, definitely. Yes, you'll be able to practice. Yeah, same with me. I can understand it completely, but I can't speak it. So I got like a lifetime subscription of like Rosetta Stone. So I'm gonna push up on it as well in my free time.
Yeah. All right. Well, when we get together, it'll be Tagalog only.
Right,
Yeah.
definitely.
All right. Well, thank you, my friend. I appreciate your time, and looking forward to um, you know, some success here pretty quickly. Not
Definitely,
quick
yeah.
money, but I think I'll be farther along now than without having to talk to you. So I really appreciate your time, and I hope the folks that are watching are getting benefit from this as well.
Yeah, yeah, no, definitely. If you have any other questions, feel free to reach out. If you ever need to get on another session, just let me know, because this has
Yeah.
benefited for me as well. Helps
Yeah.
me.
Yeah. Absolutely. Thanks. I'll probably hit Maddie up too.
Oh yeah, no, that'll be good because you'll learn from another person, and it'll teach you the same thing, and it'll stick a lot better.
Yeah. Okay, cool. All right. Well, Sean, thanks again. You're a blessing to not just me, but the whole community that's been able to use your strategies profitably. And I want to be part of the crew. So have a good rest of the day. And thanks again for